All right. Hello, everyone. Tim Davis here coming to you guys with I'll just call this a market update. I had a very busy weekend this past weekend, so didn't have a chance to catch up with you guys. But as you can see, markets continue to go on and they still move. And this week is nothing different. We're going to have a lot more movement again this week, folks, I believe, because there's a lot of economic news and data that's coming out, as well as the beginning of earnings season. And as well as a lot of folks already speculating that this earnings season is probably going to be one where you have a lot of companies that's saying, it's talking about things not as good as people may seem, and maybe a lot of they're downgrading a lot of doing a lot of revisions and downgrading their expectations for the next few quarters, and that will weigh heavy on markets, folks. So we got that to deal with. A lot of economic news we're going to be getting introduced to this week. CPI data, I think, also this week. So there's a lot of things that's going to be market movement over the next week and a half. So as we head through the middle of July, I would suspect, folks, that we could possibly start seeing some more big down moves. And if you look at a lot of the individual stocks, they showed you that today. I mean, you had some stocks that were down pretty big today. So that's just a precursor of what we can expect. I mean, we had our nice little bear market rally, and now we're getting ready to run into some events that can possibly continue to add fuel to the fire to this bear market. And also the dollar index, folks. The dollar index has been on a tear, so that's also a negative against the markets. Look at that. This is the DXY. It's been on a tear, and it's been defying logic. I mean, it's just constantly ripping higher. This is a DXY daily chart. Here's a DXY weekly chart. Look at it. It's just been ripping higher. And this is does not fare well for stocks. It's not fare well for a lot of commodities. Ripping high, even though we're approaching some overbought territories, but I think we're on the crust of seeing something historic. We may see it continue to rip higher. Here's a quarterly chart. So it looks like there's a lot more room to the upside. And this is a quarterly chart of the US dollar or the DXY. Look at the high that it put in back in 2001, 121. We could be in store to see that high be taken out possibly. So dollar's ripping, a lot more economic news coming out, and we are in the midst of earnings season. So now let's take a look at our major averages and see how things fare. We're going to be looking at the Dow Jones and Dow Jones, S&P, and NASDAQ, and the Russell 2000 and the VIX. All we're going to be looking at the futures market, because I like to pay attention to the futures market, which gives us a precursor of what we can expect when markets reopen. All right, so here's a weekly chart of the Dow Jones futures, and this dash line you see me have here, folks, I have that on each one of the major indexes, because that is the level that the markets got up to back in 2020 before the big plunge. You see me have the circle here. So we got up to that high. The next thing you know, we had a market downturn, a big one. So former resistance now turns into support, because we broke back above that area back in 2020. Now that level is going to be a level of support. So here we are, right here. Look what's happening. We are testing that level. And folks, I don't believe we're going to fare too well with holding this level much longer. This yellow line you see me have above here, that is my 20 period moving average. And as you can see, as price action continues to zigzag lower, look what's happening. The 20-day period moving average is acting as a strong level of resistance. So it is following price lower. So unless we see this 20-day period moving average point upward and start to rise up, we're going to see prices continue to trickle lower. Let's take a look at a daily chart of this same tool. And here we are. I'm pointing out something here. And as you can see, you see the 20 per moving average is just as price action, continues to trend lower. So does the moving average continue. The 20 per moving average continue to trend lower. And every time we get a little break over the 20 per moving average, we just collapse right back down below it. So that's what's been happening. And look at where we are now, right back at the 20 per moving average, just above the trend line where the COVID high was back in 2020. So we are getting ready for a showdown with this level of support, folks, that the bears are ready to break in a significant way. You see, we came down to that level right here, tested it, and got a nice bounce back in the beginning of June. But we could not really rally. We could not put a significant rally in. Look what the markets did. Only rallied up to the 20 per moving average, and the 20 per moving average said, hold up, wait a minute. Not so fast. It's been muted right at the 20-day. So if we can't find a way to really rally hard well way above this 20-day, what's going to happen? Price action is going to be pushed back down towards this level of support for another test. And if I was a bet man, I would say that the next test could be detrimental to this market. The next test of this is a major level of support, folks. If the market's price action can push back down towards that level of support, we could see that broken quick and in a big way. Look at the full stochastics for a second here. The red line, these are oscillating line signals that are having a full stochastics. The red one considered a negative line, and the momentum line, and the green one is a positive. Look how they're about to cross. Right there, they're about to cross. The negative red line is about to take over. Every time we see that it happens, this is what happens. Red line takes over the top. We have a big downturn, which is what we had back in the beginning of June to the middle of June. So could we be in store for the same thing here soon? That is a very strong possibility. Again, there's a lot of fuel in the fire, fuel in the tank to help fuel a move lower. Again, we have a lot of data, economic data coming out this week. We have earnings is starting to be revealed this week. So there's a lot of fuel in the fire to help this ignite and send markets lower. So that is how we're looking. That's how we're looking on the daily chart of the Dow Jones E-minis. Now let's take a look at the excuse me, S&P. S&P E-minis. Voila, same thing. They all look the same, folks. Price action hovering just above that long-term major level of support, which is this. If I was to back out and show you, it's the same level of support that was once resistance back in 2020. We are approaching that as a major level of support, folks, and we are about to challenge it. Look at price action back up to the 20-day and couldn't go any further. And look at the full stochastics. It is starting to hinge lower. So that is a big negative for the markets and a big positive for the bears. I was looking to a 4-hour chart. You can see how this is going to be a rough night for the markets in general. We'll probably see some back and forth throughout the night until the opening tomorrow. With respect to a daily. So that is our S&P. Now let's take a look at the NASDAQ. It's NASDAQ, same scenario, back up to our 20 period moving average. Price action up above it just a bit, and looks like it is trying to reverse as we speak. Look at the full stochastics, negative divergence. We have the oscillators in the full stochastic started to point downward. That's our full stochastics daily. That's our NASDAQ futures daily. Here's our NASDAQ futures weekly. See how the 20-period moving average is acting as a strong level of resistance. Price action is muted right below it right now on a weekly. As you can see, this is the trend line. That is a major level of support right now. It was major levels of resistance once before in the past, back in 2020, and we could not get above it in 2020, fell below it in a major way. Price marched back up, back above us, and now former resistance becomes support. So now we are going to test that level of support and see if price action will hold. So there's a major test in store for our major markets. The Russell. See, Russell's right at that level of support right now. Check out Russell on the daily chart. Here we go. Negative. Look at that negative divergence in the full stochastics. We got the negative line crossing over the positive line. So looks like we are ready to trend lower. Hence, prices will follow. And I think the Russell's going to be the first to go. It's so close to that level of support. Look at that. Bounce off of it here. Ready for another test here. So it's going to be an interesting week, folks. It's going to be an interesting week. Now, take a look at our VIX. Take a look at our VIX futures. Look what our VIX futures is showing us, folks. So we have this long area of consolidation, actually, believe it or not, that the VIX has been traveling in since March of this year. So the VIX has pretty much been in this period of consolidation where the VIX has been traveling between 2 points. And those points are getting narrower and narrower, if that's a word. So the VIX has been traveling between these 2 points since March of this year. And as you can see, it's getting narrower and narrower and narrower. Eventually, something's going to happen. Either we're going to do that, or we're going to do this. It's my guess that we're going to do this. That's my guess. So that could happen today, tomorrow. It can happen at any point. But we've been in this consolidation pattern in VIX for several months now. So we could be getting very, very close to the end of this consolidation pattern in the VIX. So that's something to keep close eye on, especially as we go through earnings report. Signs that the VIX may be ready to pop. Look at the full stochastics. Look at how the full stochastics has been trending down since the beginning of June. Now we're back in oversold territory. So that's a sign that the VIX could be getting ready to pop. Earnings percentage also been traveling down since then. RSI also been traveling down since then. So that's all signs that the VIX could be in oversold territory on. I'm taking a look at this daily chart. All right, folks, I have to step away for a second, so I'll come back with a follow-up. All right, have a good day.